Head Equity Research at William Monroe. Neil, Mayuresh, your thoughts on both Sun TV and United Spirits. And this is necessarily to do with the stock and not to the way their teams are performing in the IPL.
Afternoon, Mangalam. Absolutely. So to that extent, I think the expectations in terms of market share gains, specifically in the case of Sun TV, is probably being taken with both hands as we speak. And therefore, across markets and across languages as we speak, they are gaining market share. The other element obviously has been the OTT platform. And there again, I think the expectations in terms of losses narrowing down, along with the investments that they're probably doing in terms of the exhibition business, producing films, they'll be very, very selective about it. So to that extent, the expectations in terms of ad revenue growth, which has seen a sharp increase, subscription revenue growth, which is stabilizing across markets, I think that is something which is propelling a lot of investors to believe that earnings should be relatively strong. So I think that's the tailwinds and the momentum for which Sun TV is probably moving. And the momentum can very well continue. For United Spirits, I think the expectations in terms of more premium launches expected to come their way is something that is acting as a clear trigger for the stock. Obviously, input costs had risen a few quarters back. They have stabilized to a large extent, including glass prices. And therefore, I think with moderation in input costs, the expectations in terms of better volumes going forward, I think that clearly puts in a better operating leverage as we enter the next few months. I think we should also keep in mind United Breweries, Mangalam. I think with the heat wave going around, I think the best season for them is the next quarter.
Undoubtedly. Mayuresh, afternoon. What about specialty chemicals? Do you think this quarter's numbers will throw up any opportunity to start accumulating? What do your channel checks suggest? Have earnings bottomed out? Is restocking taking place?
So, afternoon, Rima. I think destocking is largely over, is what we have understood when we speak to a lot of players within the space. The second element, obviously, is pricing. The pricing has still not improved to a large extent. Obviously, I think the commoditized chemicals, the pricing is still under a lot of pressure because of the sheer China factor. But even for specialty chemicals, the niche players itself, the pricing has not improved significantly because demand still looks a little bit sluggish. So to that extent, you're absolutely right. Q4 numbers might be a little bit on the weaker and the softer side. And in fact, that might also get pulled over into Q1 numbers as well. So a large element in terms of earnings expectations might only happen post Q1, where I think a large element in terms of restocking expected to take place. The expectations in terms of demand coming back in a calibrated manner, which will mean that the second half earnings will be relatively better compared to what we probably see them languish over the last year or two. So still expecting weak set of numbers across the pack. I think a couple of companies, 2-3 companies might perform exceptionally well, contrary to market expectations. But again, I think post Q4, rather post Q1 numbers, I think that is the time probably to look at these companies. I think a lot of these companies, their EPS, RS ratings, the institutional holding as we see it in CanSlim, still remains very, very poor. So I think we will wait our time out, wait out for Q4 numbers, watch out for commentaries, probably take a call post Q4 numbers.
It's rare to find a sector which is not done well, right? So in chemicals is it's that it'll so yeah, a lot of interest there waiting. The waiting game, of course, today we are seeing pop. Indigo is, of course, is done very well from 2,000 to nearly 4,000 now, 3,800 in a 15 months time. Mayuresh, is Indigo? Of course, there's only one Indigo, but again. The thing is to try and buy things around that theme. If the theme of travel, tourism, etc. stays very strong, what about something like GMR Airports? Not that it has not done well, from 45 kind of levels to what has gotten up to, but this year so far flat. If you just run a cursory run through more stocks which done well in 2023 and what they've done in 24, they're all up 25%. So it's kind of hard to find things which are not already up at least 20% this year. GMR is one of them. Again, off that theme of travel, any thoughts there, Mayuresh?
Yeah, so Prashant, I think we are still trying to scratch our heads around on what to buy. So to that extent, I think if you probably extend this travel theme to hotels, luggage, etc., I think Juniper Hotels is something that we like at MarketSmith India. I think the thesis is very simple. I think Q4 numbers should be good, but Q1 numbers will be even better. Obviously, the Hyatt franchisee that Juniper Hotels runs through I think that has been growing at a very good pace, and they've got the right ingredients in terms of the product mix: premium hotels, mid-priced hotels, and entry-level hotels as well. So to that extent, I think the margins that they're probably posting, 38 to 40% that should continue. Occupancy levels about 75-76% is a given for the industry as a whole. And therefore, the calibrated approach in terms of opening up new properties will mean the capex is probably well planned out. The leverage will not overextend itself on its balance sheet. And therefore, the cash flows should be pretty strong, which gets reflected through our EPS ratings. So I think we have been extremely picky and choosy out here. I think Juniper Hotels is something that we like. GMR had done well in the first half in the second half of the last calendar year. But to a certain extent now, I think it's largely getting priced in terms of the performance that can go through. Obviously, there is still a lot of juice in terms of more airports which are expected to come in the next few quarters and years, which gives them ample scope. But it also increases a lot of capex and leverage needs onto their balance sheet. And therefore, the adjusted cash flows will still remain weak, adjusting for the capex requirements that might probably happen. So selectively, hotels is something that we're looking at.
All right. Thank you, Mayuresh, for joining in.